All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the global market analyst here at Markets.com. And today is Tuesday, the 6th of May, 2025. Look, I just wanted to quickly share with you a little piece here on one of the big economic events that's happening tomorrow, and that's the U.S. Federal Reserve interest rate decision. As you are aware, look, it's a very anticipated one, in my opinion, due to the attacks that we saw from the White House, on the Federal Reserve, on Jerome Powell, and of course, that's like I said, that's now on everybody's mind. What is he going to say, or is he going to reply something or mention something during the press conference? Look, about all this and a little bit more in a bit. First, we need to quickly read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. I'm going to stick around here. But yes, like I said, this big event tomorrow, I think could be a really nice market mover. Also, before we jump into the charts and everything else, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, now then, look. Oh, by the way, I have the stock of Berkshire Hathaway here. If you are aware of news and you know what's happening, so basically Warren Buffett is stepping down as the CEO of Berkshire Hathaway, being, if I'm not mistaken, 94 years young. So yes, I mean, look, the person is a genius. The person is he does deserve all the credit. Maybe, of course, something he did wrong in his past or something like that. But in general, it seems to be what's relating to the company. I think that's like a very good example of how how you need to stay sharp up until that age. Look, full respect. I mean, hopefully, he lives a few more long years. Look, the stock here, you can see that it's dropping nicely. I mean, in general, the stock has been on a good run. And I mean, look at this. It's very parabolic here, move here. So eventually, what comes up must come down. I mean, we had similar stories with Nvidia, right? I mean, look, eventually it does correct itself back down. So I don't think that Berkshire Hathaway is one of those companies that will not correct here. A new person is coming in from 1st of January, so we'll see how it plays out. For now, I think that there could be maybe some more upside for this one, just to kind of have this last dance. But then, yes, maybe again at this point, I'm just observing the price action. I want to see where this is going to go, and then we will go from there. If you are interested in this, of course. Now let's jump into the U.S. dollar. Now this is what I wanted to pick up on, and overall, you can see that the U.S. dollar has been beaten up here a little bit. Of course, thank you very much, tariffs and. Look, somebody might say, but it's the little sacrifice for the common good. Yes and no. I think it really depends on how you do it. So if you do it discreetly or you actually do it, loudly. But again, there's like I said, there's a lot of debate. We're not going to go into that. But what we're seeing here is yes, from kind of February time, the U.S. dollar has been taking a hit, a major hit, and look at this. This is a monthly chart, by the way, and we have been declining for quite a lot. So recently, we're started seeing a little bit of positivity. Now, in my morning webinars, I talk a lot about this. And I mentioned the US dollar. Basically, what I want to say that look, after we saw this nice little reversal, we formed something of an inverted head and shoulders pattern. We broke the neckline. We've traveled higher. Then I said, look, we're going to keep an eye. I'm going to keep an eye on this 100.17 territory. Fantastic hold up here, below basically there, below this upside line taken from the low of the The lowest point of July of 2023. So now there is a good chance for this one to actually pop back up, but I don't want to rush into things. Look, what can I say? Certainly, we're watching the Federal Reserve interest rate decision, which is coming out tomorrow. Check out the economic calendar when that's happening in your time. But we are not expecting major. We're not expecting major shifts because again, the current probabilities for the rate to remain the same, and most likely it will do stay. It will stay the same because look, I mean, we saw the White House attacking Mr. Powell, calling him names and Mr. Too Late. Yeah, look, we saw the market reaction. It seems like the market is with the Fed. And in a way, that's a good thing, I would say, because again, political jumpiness is not sometimes a good thing. And yes, of course, it creates volatility, a lot of opportunities in a way, but yeah. Look, so that's what I'm saying. So I don't think that they're gonna, he's gonna change his stance. I'm talking about Powell. He's gonna change his stance on not having or not doing anything during this meeting. I think yes, the rate will stay the same. But what's interesting here is not the rate announcement, but the press conference half an hour later, because the question is he gonna say that, oh, we're actually thinking of cutting rates maybe sooner than later. If something like this comes out, then I would say we could see a nice little shift here, towards having a cut. The probability would be greater. Of course, there's still a lot of time until the 18th of June, but the percentages could, even out a little bit more. And in a way, what could happen with the US dollar? Well, the US dollar could be, could take a hit. We could see a drift lower, but what I'm doing here is I'm waiting for a drop below the 98.65 in order to get a little bit more comfortable with the downside. However, if Powell will say that, what, they're in no plan to rush and no plan to, rush with the cuts, then we could see the US dollar popping higher here. And if we do pop above that 100 zone, then great. I will consider some higher levels. I'll consider a larger correction to the upside. That's what I'm going to consider. So then we could target this downside line taken from the high of the 3rd of February, and then we'll go from there. What could happen with the US dollar here? Oh, sorry, with the US dollar, with the indices, with the Dow Jones Industrial Average, we could see this one if the he goes in, let's say they're ready to step in if needed and blah 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 and stuff like that, the usual rhetoric, then yes, we could see the Dow Jones here traveling further north, maybe even climbing towards above all the EMAs, because on the S&P and the NASDAQ, we did already visit the area above all the EMAs on our daily chart. This is the S&P 500, by the way. So, but if we can get this nice move, above all the EMAs, then yes, great. I will go a little bit more to the upside. So, this is regarding the indices here. Look, if he's going to come in and say that he's not really willing to jump in with the cuts yet, we could see maybe a little bit of a larger correction back down here, and then we'll go from there. And looking at the situation in the Forex world, we can see that the pair here, USD JPY, is drifting lower. Of course, we understand we saw DXY, but it's not really a significant drop. So this little pattern, by the way, I'm loving this little pattern here, and this little idea where, look, whenever we have a strong, this is a bullish, what's the name for that? Let me just double check very quickly. This is the 3-line strike, or the bullish 3 method. Whenever we have like a big candle here to the upside, and then the continuous 3 candles are within, their bodies are within the first candle, the second, the third, and the fourth candle is within the body of this one, then we could see a nice little pop here back up. So the kind of the 5th candle comes in and it goes to the upside. But again, that's theory. We need to wait for confirmation. So keep your eyes on this. Like I said, I'm thinking that we could see We could see this one, like I said, drifting a little bit lower. If you see the body today's candle, the body of today's candle remaining within the big body of this first candle, there is, like I said, there is a chance for this one to actually push back up. But that's what's in relation to technical analysis. Again, we need to combine that with fundamentals. So we look at all scenarios. So keep your, like I said, keep it calm. That's the word. Keep it calm, keep it quiet, like be a little bit more on the savvy side. Just don't rush. Stay calm and stay cold headed. And yeah, I mean, I think everything will be fine. Wait until, if you have your strategy, wait until all the boxes of your strategy are ticked, and then you can do something about it. So, ladies and gentlemen, I just wanted to share this very quickly with you. So hopefully it helped. Hopefully you found this useful. Keep your eyes on the Federal Reserve tomorrow. Of course, if you are trading oil or something oil related, then EIA crude oil stock change. This is something that to keep in mind. And yeah, we do have still more data coming out later on this week from the U.S. But for now, let's focus on the Federal Reserve. Ladies and gentlemen, as always, stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. I'll see you next time. Bye bye.